Dear subscribers, as you know, we shared many information for you, and we are studying very hard to find current news for you. However, I cannot use this channel for future. Please follow our new channel called as Daily News Report and watch our video to support us. Link in description. Also, you can reach the video we shared on Daily News Report by clicking on the top right button. We highly recommend watching, subscribing and sharing. We will continue to share some news on this channel, but we take precautions against some situations for future. Thank you for supporting us.
Deep state, they needed this because their entire system was crashing. Now, it wasn't crashing because of the pandemic. It was crashing before this, and they needed something to maybe cover it up or to keep it going. I just wanted to get your explanation, like you were telling me before we started to record, of why this is happening right now.
Okay, Dave. The reason we're in the predicament we're in is because of compounding and exponential growth. We have a debt-based fiat monetary system which requires money to grow at an exponential rate. And if money stops growing at an exponential rate, then the system implodes or crashes onto itself. And I look at the pandemic, which I believe was man-made 100%, and I believe that the pandemic was released on the populations of the world by globalist interests because they needed an excuse to create infinite amounts more money. And the response to the pandemic around the world has been, factually, the creation of untold amounts, trillions more money. So, and when I speak about the creation of money, we need to also do a little bit of backtracking or background work, because this is intimately tied. This whole concept of exponential growth of money is very uniquely tied to the work of Catherine Austin Fitts and Dr. Mark Skidmore from Michigan State University, who have documented the creation and disappearance of at least $21 trillion in what I refer to as dark money from the balance sheets of the Department of Defense and HUD, Housing and Urban Development, from the years 1998 to 2015. And what their work illustrates to me is basically it speaks to the requirement of money being required at an exponential growth rate, as pointed out by the work of Chris Martenson in his crash course. And to watch this expose that Chris Martenson prepared, all you need to do is Google Chris Martenson and Crash Course, or go to Chris's site, peakprosperity.com, and you can view, there are links there where you can view the crash course, which is incredibly informative and great viewing and reading anyway. But the whole concept to the exponential growth rate of money is that most people don't understand that when we have compound growth, how this ultimately leads to exponential growth. And the way Chris Martenson explained this, to visualize it for people, he said if you take a drop of water and you put it in the middle of Yankee Stadium, and you double the amount of water, starting with a drop, if you double the amount of water every second, how long would it take before Yankee Stadium is full? And if I remember correctly, I believe the amount of time it takes for Yankee Stadium to be full, beginning with a drop and doubling it every second, it takes 50 minutes for Yankee Stadium to be full. And as Chris Martenson explains in his expose, after 45 minutes, with this doubling and compounding of water, the water would only be up to your ankles after 45 minutes. And as Chris says, it's in the last 5 minutes that all the action happens. Well, we have a money supply that's been growing at a compounded rate. And we have necessarily been required to, or the powers that be, to keep this system operational and functioning. They've had to be feeding more money into the system than we are aware of. And the reason we don't notice it to begin with, most humans think in a linear fashion. And we have trouble understanding or grappling in our heads with the whole idea of growth going vertical or exponential. And yet I would have it that our money system, fiat money system, has required vertical money growth now for a number of years. And this is why the powers that be who run our fiat money system, namely the Federal Reserve, who's in charge of the money, they model everything. And they understand the concept that Chris Martenson explains so well in his crash course. And they knew this back in the mid-90s, that they would encounter a time when money growth would go vertical, which is why money started disappearing from the books of HUD and DOD from the time period of 1998 to 2015. As Fitz and Skidmore pointed out, over 21 trillion in that 17-year period, or 17 years, 98 to 2015. And more money obviously disappeared after 2015. But anyway, this money was basically put into a slush fund. And the slush fund of choice, in my opinion, this money was all siloed in the Exchange Stabilization Fund, which is a secretive adjunct to the U.S. Treasury, created in 1933. And when it was created, it was seeded with close to $3 billion in 1933 money, which made it overnight, or with the stroke of a pen, the most powerful financial entity on the planet. And, since 1933, there's been very, very little public disclosure or talk about what the Exchange Stabilization Fund does or what they're up to. But you see, and the reason there's so little talk about the ESF is they are above oversight. They are above law. These people, this entity, which is operated by the Treasury Secretary in the United States, it operates above all sovereign laws, and it doesn't report to Congress. So it basically has a free ticket to do whatever it wishes in the world. And its mandate is to basically perpetuate the dollar as the world's reserve currency, which is what it's doing. And keeping the dollar from imploding on itself would be well within the mandate that was set out for the Exchange Stabilization Fund back in 1933, when it was created at the same time that gold was confiscated from the American public. And the way it was created, the gold was confiscated from the American public. The American public were paid $20 an ounce for their gold, and then 6 months later, the gold was revalued up to $35, and that's what created the windfall, close to $3 billion profit, which seeded and was basically the seed stock for the ESF. Anyway, but these guys are involved, and it's been documented over the years in exposés by other people, namely Eric de Carbonell of MarketSkeptics.com fame, who did a YouTube expose on the Exchange Stabilization Fund, a 5-part YouTube series, which outlined how the Exchange Stabilization Fund is involved in everything from regime change to gun running, the drug trade, some very unsavory activities. But in any case, the Exchange Stabilization Fund is operated as a gigantic black money slush fund. And this fund, ESF, this is where siphoned off 21 trillion identified by Fitz and Skidmore. That's been the likely destination of that mad money, or I call it dark money, created out of thin air, with not necessarily any debt instruments attached to this money. It's just money that was literally created with digits from entered on a keyboard, and dark money it was, and it creates this enormous slush fund to satisfy this compounding and exponential growth of money that had to be fed into the system to keep it from imploding on itself. And creating that much money and deploying it becomes a big issue, because if it's deployed in the domestic economy, it creates very observable price inflation in the domestic economy. And Dave, it's my contention that the reason why America has developed such an adventurous profile in the last 20 years, fighting untold wars in the Middle East, is because the creation of many trillions of dollars that had to be fed into the fiat money system to keep it from imploding had to be deployed or used in a way where it wouldn't express itself as price inflationary in the domestic American economy. And that's why roughly 7 trillion that we can count was used making pockmarks in the sand in the Afghanistan war and the Iraq war. And this is also why America never seems to have to worry about whether they can afford the next war with Venezuela, or whether they can consider having extensive new military engagements in Syria, or how they can even stop to think about a possible war with Iran. You see, what it really comes down to, the only time America seems to, and when I say America, I'm talking about the globalist-controlled America. The globalists always have a problem and always have to stop and wonder where money will come from if they create a new social program in America. There's always the question of, can we afford it? And what they're really concerned about is using this money that's going to be created anyway. If they use it in a domestic endeavor, it will create and it becomes highly inflationary in the domestic economy. So they like to export the money or use the money in places overseas where it doesn't impact directly the domestic economy, and it doesn't show up as price inflation in America. So in this respect, this dark money that Fitz and Skidmore have identified, it's being used to give sustenance to our failing fiat money regime. I would contend that they've more or less run through that money. They've used it up, and they needed an excuse to create more, as in many more trillions. And this is exactly what has happened since this pandemic, or plandemic, that I think it's more aptly named as. Once launched, this plandemic has given them cover to create many, many, many more trillions of dollars, except this time it's a little more transparent. But with people locked down and at home, people are welcoming the creation of these dollars, because they're what's keeping the fridge full and paying for the Netflix subscriptions in current times. And could you imagine if the Federal Reserve and the U.S. Treasury said they had to create or were going to create $8 to $10 trillion of new money last October? The public would have said absolutely under no circumstances will we allow that. They would have said that this would have represented spending gone crazy. But I mean, you throw a pandemic into the mix, and suddenly people want to be paid. People are going to be locked down at home as long as they're kept entertained and fed. They don't really care how much money is being created. So the thing I'd like to point out here is that a lot of people believe that this injection of money that the Fed has announced to date is going to get us back to normalcy, or what the world used to be. My view is that won't happen at all. My view is that we are on an exponential growth curve for money that is so extreme that this 6 to 8 trillion or 9 trillion or whatever it is they've created in the last 60 days, this is an installment. And this installment probably gets us through the next, I don't know, month, 2 or 3. And come late summer, I believe that the money powers that be are going to be back, and they're going to need to invent another excuse to create another 6 or 8 trillion. And they'll probably either have that wrapped up in the excuse of the economy didn't get reignited, and we have to reignite the economy because it's failing or it's collapsing. But they're perpetually going forward going to need to create more and more and more fiat money. So the trillions we've seen created already won't do it, won't cut it, and isn't going to bring us back to normalcy. And of course, there will come a point where nothing that monetary officials are telling us will be believable. And ultimately, we're either going to go to total war, in my view, or we're going to absolutely hyperinflate. And in which case, I hope everybody has a well-oiled wheelbarrow and the one wheel is full of air. Because we're going to need it to hold all the digital dollars that are going to be created. So that's where I'm coming from.
So you mentioned the ESF and they use that up. Are you saying that the ESF is empty now? There's nothing left in there? Or they just use the 21 trillion?
I think they've probably consumed or run through, if not all, a substantial portion of the 21 trillion. And the 21 trillion that was identified by Fitz and Skidmore, that's a sort of a number that was thrown out. That number could be a lot bigger than 21 trillion. But the takeaway from this, Dave, in my view, is that many trillions of dollars have been created. And the real issue is, basically, nobody in the free world really understands how much money there is in the world. I mean, we have data that tells us that the monetary base is somewhat reflective of the Fed's balance sheet, and that would indicate that you can look at the charts and the data on the monetary base. And the Fed's balance sheet, the St. Louis Federal Reserve is the keeper of monetary aggregates for the Federal Reserve System. And you can look at the growth in the Fed's balance sheet since the financial crisis in 2008-9. And you can see the growth in the Fed's balance sheet. Okay. And most people take that as somewhat of a representation of money growth in America. You see, and to me that is it's misleading in my view as to how much money there really is available or being put to work in the economy globally, or from a dollar standpoint globally. And the reason I say that, because if if there's this extra 21 at least trillion, and maybe considerably more than that, because the 21 trillion only covers the period 98 to 2015, and let's just say whatever they were doing between 1998 to 2015, they didn't stop in 2015. That's just where the analysis stopped. So they continued creating more dark money after 2015, and who knows how many more trillions they created from 15 to 19 or 20. And these dollars have been being put to work, and I mean, if you add those dollars onto the amounts reflected by the Fed's balance sheet, the curve looks a lot different. Instead of it being a parabolic up and then a leveling off that the Fed's official aggregate money data shows, if you add another 21 or say 25 or 30 trillion to that amount that's represented in that graph showing the growth in the Fed's balance sheet, suddenly it looks like a banana up, and it looks like exponential vertical up curve. And I think that's probably a much greater representation, accurate representation of the true growth of money. And so, like, what I'm saying is nobody knows how much money there really is or how much money has been put to work in the world. We have in my view, an inaccurate belief or evidence that growth in money is X. And I believe that the true amount of money that exists in the world or that has been put to work in the world is maybe 4x, maybe 5x, maybe 10 or 15x. So what I'm saying is nobody really has an accurate handle on how much money there is in the world. And I want to relate this back to something in the real world. I was speaking with a friend of mine this morning, and he used to run a boutique brokerage firm that was involved in raising money for provinces in Canada. And he was speaking with the financial head of one of the provincial governments in Canada who raised money in the last month. And his commentary was he couldn't believe it that the provinces in Canada collectively in 1 week last month raised north of $60 billion in bond issuance. And the fellow who worked for the Treasury in the Ministry of Finance of this province in Canada made the remark to my friend that he couldn't believe how, when the provinces in Canada were collectively raising $60 billion in 1 week, how all of their bond issuances were oversubscribed. This is not representative of money being tight or credit conditions being hopelessly difficult. This is representative of there being too much money in the world. When provinces in Canada can execute issuance of $60 billion in a week, and all of their offerings of bonds are oversubscribed, it just reeks, to me, it reeks of skunk. The story we're told about money and how dear money is and how unavailable money is doesn't mesh with reality. And the reality is the world is awash in cash. And why this hasn't expressed itself in the real let's just say the real smoke alarm in the financial system, which historically has been a rising gold price when monetary debasement is occurring, can only be explained by the shenanigans that go on at the New York Mercantile Exchange, where the COMEX is located, where infinite amounts of paper gold are supplied to the market to keep the price discovery mechanism artificially suppressed, as in the price of gold as expressed by COMEX gold futures remains suppressed beyond belief. And if you want to understand just how corrupt and how crooked the whole derivatives futures market is for commodities, and strategic commodities in particular, I mean, we had a perfect example of it just a couple of days ago when West Texas Intermediate crude oil futures traded at minus $40 a barrel. I mean, this is something that has utility, and all I can say to the listening people is that any exchange that would allow something that has utility, like crude oil, to trade on their exchange at minus $40 a barrel is an exchange that is critically broken and that needs to be regulated. And the regulation they claim to have is absolutely and utterly false, because there isn't any. And it's being run by a group of criminals that all need to be investigated, and probably a lot of them need to go to jail. So we don't have regulation. You see, I mean, there are people that would be listening to this saying, Rob, what you're describing is sounds like a huge criminal conspiracy. Well, you know what? If you want to just think about it for a minute, to think that crude oil could trade at minus $40 a barrel, if that isn't the definition of insanity, and if that isn't the definition of something being run by criminals, tell me what really is.
So why do you think crude oil dropped like that all of a sudden? I mean, it looks like it's going back up, but why do you think it dropped like that? I mean, they were talking about a glut of oil. There was too much. We had to stop the pumping of oil. Do you think that's the real reason?
Okay, well, for the same reason, Dave, you see, this is the kind... I love the logic that people try to use to explain why oil can trade at minus $40. They say that when people buy oil, they have to have a place to put the physical barrels, and if they don't have a place to put the physical barrels, then they have to sell them. Okay, so this is the rationale they use, and that the storage facilities are all full. And therefore, if you bought oil and you don't have a place to put it, you have to liquidate it, and then there's blood in the water, and then people take advantage of you, and so the price basically can drop to any number negative. Okay, so Dave, I want to use the same logic and say to you, okay, well, when I buy a gold contract on the same exchange, and I want delivery of physical metal, and I say, okay, like I've got this contract here, or I bought 10 contracts that are 100 ounces of gold each, and I want my gold. Okay, I have 10 contracts. I want 1,000 ounces of gold now, and so I go to the exchange and I say, okay, I want my physical gold that these contracts supposedly represent. And you know what they tell me then? They tell me, well, we have this thing called an exchange for physical. So we're not going to give you your gold. We're going to give you this other promise that says you can go, now you can have your interest shunted to London, and you can go and work out a deal with them with this new promise for gold. And we don't see those exchange for physicals being settled in physical gold in London observably either. So the reality is, it works one way when they want to keep prices down. You see, powers that be are always happy if things trade lower, because then it doesn't appear as being inflationary, and it doesn't really look like things are broken from the standpoint of rising prices. But when on the other hand, when you ask for delivery of your gold, you can't get it. And I mean, you should be able to use the same logic that the person who sold the promise of gold on COMEX to deliver the metal, they should be forced to go and buy the metal. The same way the person who suddenly is long or an owner of crude oil and has no place to put it, he has to sell it, and even if it means ruin. But the people who short and sell gold, they're never forced to cover or to buy or make good on their promise. It gets shunted off. So until I see the law or the regulation evenly applied to both long and short, what I'm viewing is a criminal pursuit, and there's no other way to say it other than that. Because the rules are not enforced evenly. And of course, the COMEX really isn't an organization subject to any kind of regulation anyway. It's a country club. They make their own rules. They enforce them whenever it suits them. They enforce the rules. And if it doesn't suit them, and it's owned by the money interests, and it's never in the money interests best interest to have to deliver gold or to see the price of gold rising. Because when the price of gold is rising, it's an F on the report card for monetary authorities. And they do everything in their power to not have a failing grade. Okay? They always want to have a passing grade because it's a moniker or the report card. It basically it judges their conduct, and if the price of gold is rising rapidly, monetary authorities have a failing grade on their conduct and their stewardship over our economy and over money.
So, are you surprised that gold is moving up right now?
Yeah, well, you know what? I call it leakage. And when I say leakage, Dave, I'm just saying that so much money, it's sort of like, if you can imagine, it's one thing to build a dam to hold back water. And, you can artificially build a dam. It takes a long time to build a dam. You don't put a dam up in 5 minutes. You got to build it. It takes time. But when you have a tsunami coming at you and you've got a traffic cop wearing a white glove holding up his hand to stop, the tsunami doesn't really give a damn. And the amount of money that's been created in our fiat world and the amount more that still needs to be created is, to me, metaphorically, it's a tsunami coming at us. And the tsunami will rise. They say a rising tide lifts all boats. The tsunami of money coming at us will make gold and silver, which are already in short supply, and physically buying or procuring an ounce of gold today or an ounce of silver today at anywhere near the alleged prices as depicted in the false markets of COMEX is next to impossible. And reports of prices being paid to get an ounce of silver in the door, if you're a buyer, where you've got to pay double the COMEX price to get a physical ounce on board or close to that, makes a mockery of the supposed price discovery, which is completely and utterly failing in front of our eyes. And the reason it's failing is because people let's just say people know when they're being screwed. People intuitively know when they're being screwed. People intuitively know when too much money is being created and it's time to buy metal. Even though the smoke alarms have been turned off and the prices of gold and silver, precious metals in general, are generally referred to as the canary in the coal mine or the smoke alarm in the building when it's on fire. Just because the alarm is broken doesn't mean people can't smell smoke. And right now in our financial system, there is smoke billowing from all corners. And people are getting hip to that, which is why there is a rush for physical metal in the world today. Okay? And this is what's occurring whether we like it or not. And the amount of money that's going to be created in the next 3 to 6 months is going to make the amount created in the last 60 days look small. So get ready and get prepared for it and prepare accordingly.